one of the managing partners of Angel Prime. And prior to this, I've done numerous startups, including Snapfish, which was bought by HP. It's the connection with Shripati here. And I lived in the Valley for close to 20 years and Bangalore for the last 7.
Thanks, Bala. Thanks, Avike. I'm compelled to answer every question. Everybody doesn't have to answer because they have a long list of questions here. So the first question here is about what is the shortest time taken to make an investment decision and why in your experience? When did that happen and why did that happen?
So the shortest decision was an overnight piece. I knew the people who were involved. So that probably helped the process. I knew they'd done this before. We had talked about it. We have worked through. In some ways, I would be cheating if I said it was just 24 hours. But the flip happened because the person was debating whether to quit a company or not quit the company, right? He wanted to do a lot of things in parallel, right? In my mind, I'm saying, this is not going anywhere, right? Guy calls me in the evening and says, I'm going to quit the company, I'm off. So my next question is when, right? So he says, what do you mean when? I said, when are you out of peace? He said, no, I've just put in my resignation letter. I said, done. Tomorrow morning we can start talking about what could. That's been the fastest. But I would be cheating to say that, the process took time. I knew the person involved and it just happened on a...
It's like you had one particular blocker and that blocker went away.
That blocker went and I was saying, done.
Okay.
So, Angel Prime is a slightly different type of fund in the sense that we invest in only 3 or 4 companies a year. So we actually fall in love quickly or fall out of love very quickly. So usually in the first meeting, we know whether this is a no or not. And at that point, we don't screw around and waste the entrepreneur's time. We usually say politely a no. But if we do like the person, we do actually spend time because we have to learn. And the style of our investing is to learn and understand, because we do very few investments and we do a significant chunk for seed stage. So we take usually about 2 to 4 weeks to give an answer. After that is procedure, which will probably take another 4 weeks to get the money in the bank.
Okay. I have another question here, which is that, so we're talking about the screening process, right? So has there been a situation where you passed on an investment opportunity, initially said no, Bala, maybe in the first meeting it was a no, but you revisited it again to go forward with the decision, right? What are some of the circumstances in which that happened, and what are the things which might have changed to positively impact such a decision?
Yeah, and I don't know if it is. Yes, the answer is yes. I've done that. I can even name the company and I can tell you what happened.
That would be helpful, actually.
Yeah. So I don't know how many of you know. There's a company called Uni4. Anybody knows Uni4? Chennai-based company, right? You may not know that their first few projects was on the social space. They did some bit of social piece. So when it was first presented to, when I first sat through that particular meeting and I was listening to the pitch, it came across as a social impact pitch, right? It came as in IIN, there is a separate group called IIN Impact, which looks at the impact, and he is part of that set, and I'm part of that set. Nagaprakasam is part of that set. So I looked at it, and I walked away from the deal thinking that, look, this is not an impact deal, right? So I didn't think of it as the other side. They came back, I think about 3-4 months later. 3-4 months later, after they went and to work through. And by that time, I had spent some other time looking at what they were doing on the voice side, and I was very excited about their natural language, the voice processing, especially on the accent. And they had done a deal for Boeing, which kind of switched my mind and saying, hey, this is cool. If they can do this from this particular piece, then I can think of a lot more applications.
Maybe one case, actually a live case, so I can't name the company, but I think in the first, actually it went in a flip-flop way. We initially said we will invest. When we actually started doing diligence, we found that there is some restriction from one of the customers to actually grow beyond that. So we took a break. Then after maybe a couple of, I would say maybe 1 or 2 months later, it came back again. And so I think there is some negotiation that we can actually do it outside. And so I find that maybe in some cases, if there are some restrictions on what methodology or IPs can be used in a situation, which happens to be the lead customer, but there is some cool off or some kind of a restriction. I think when such conditions change or get negotiated, the deal comes back. So I think we found in that case the deal was good, but we went through this loop. I think the loop is still on, but hope we'll be through. But I think off late I'm seeing, especially even in the impact ventures, I find it may not be customer restriction, but we are not, I mean, this is of course outside of IAN context. We are not very sure about the impact side of it. And hence, initially you think it's impact. We go and spend time. Then he said, okay, this looks like a normal business with not very good clarity on impact. Come back, then something changes, then we go back again. So I think maybe those are the conditions which seems to flip-flop. So you may start with a good deal, it goes cold, comes back. You may start, we thought it's a bad deal, but then it's a good deal. So I think in both cases.
Let me ask one more question. I think Mark Andreessen famously said that what was his biggest mistake was he didn't invest in Square, I think twice. So from your standpoint, right, I think a lot of our entrepreneurs here feel that the investors don't get it, right? They have a great idea, the investors are not getting it. But let me ask a situation from your personal experience where I think you actually didn't get it. And it was a great idea, it was a great opportunity, and you ended up passing on it. And what are some of the reasons why such a thing might have happened? Anyone?
I usually have a regrets list to learn from, so I definitely can think of two. I'm not sure I can name them, but they were great entrepreneurs, and what looked like a good idea, I just didn't get it. So definitely.
What was the thing, Bala, which you would, in retrospect, since the purpose of having a regrets list is perhaps to have some learning from it, is that you think you could have done? Because there might be a great idea which one of our entrepreneurs here has, pitching, and then what could you have done to probably understand the...
I think if you see a great entrepreneur, the lesson I've learned is, don't make a quick decision, because the idea can morph and change and evolve. Great entrepreneurs are very hard to find, and that is like the lesson. So if you see now, say great entrepreneur, even if the idea doesn't go, we at least try to keep engaging and seeing if you miss something. And that's obviously a judgment call on what is a great entrepreneur.
Yeah, I mean, as anybody else, I've missed quite a few that are out there. But I wouldn't say it is not because of not getting it. There are, it's hindsight is a 20/20 vision that you don't have the luxury of in most cases. The circumstances at that point, I think, will make you take some of those decisions, which may not be something about getting it, but it's as I said, right? We've invested in a travel company. I will not invest because I'm, morally bound on a no compete in my own mind. Nothing to do with that. I just don't want to do that because there's a conflict of interest. So that means I've missed. By that, I can tell you automatically that I've missed two others who got another round, who've gone on to whatever is the piece they had come to me at that time. And I can think of another case where a similar thing happened, but there was no conflict there. It was just that, I didn't think it was an angel deal. I thought it was a Series A deal. I couldn't participate on that angel piece. I still talk to the entrepreneur. I'm not in the deal. He had gone beyond an angel to a Series A directly, and I still talk to the guy and say we converse once in a while. He asked me for advice, I talked to him. But I completely missed out of the deal because maybe if I'd gone and pitched and done something else, I would have been part of the deal. It just went over my head in that sense.
I mean, one example from my side, not sure whether I can name the company, but this is actually on Let's Venture platform. So it's an online, interest showing, right? I was the third guy actually, but I didn't get it. The first time somebody said no to me. I said, what? I'm going to invest in you. He said, but no, we are done with it. So we got two investors and we are closed. So I actually found that maybe just to get a comparison, sometimes maybe we read it wrong, that maybe, and hence we missed it. So in retrospect, you find that I should have done it. In some cases, I would say, especially traction-based plays, which are based on some partnership or where it's all completely traction-based play, I think timing is important. And as Ravi said, there are very few good deals in that sense. So it's actually a bit of speed. So that's a bit of a surprise to me that, but yeah, it's good for them.
I think more of the story for our entrepreneurs here is that if you have actually hit an inflection point in your own business and you're seeing some sudden increase in traction, make sure that if in your previous list of investors you have talked to, there's somebody you really wanted and who has passed, jog their memory, because they might actually be in this kind of a boat. Sundi, I think that I just want to make sure that you want to take over in terms
Oh yeah, sure. Please.
Yeah, so I think we talked about great entrepreneurs
Mike?
and or in a person while you are evaluating a deal, right? I think one is the business, there's potential, but for early seed round ventures, I think it's more about the conviction and what you look for in an entrepreneur. So brief thoughts about what are certain characteristics.
I don't claim to have the right answer, nor the right judgment all the time, but at least I can answer what I look for. So typically it's kind of deep thinking, and if there is traction, obviously that kind of proves for itself. But even if there is traction, sort of second order, third order level of thinking, right? So if, like for example, without going sort of very specific, entrepreneur comes and says, this is an idea, what do you think? And I say, well, what about that, right? This variation. And usually if the entrepreneur says, you're kind of wrong, because I've already thought about that, this is the reason why it doesn't work, I usually get very impressed. Because you don't want, like, if the person says, well, oh, that's a good idea too, then it's like, okay, somebody like me randomly comes in, in 1 minute gives you something and you think that's a good idea, you haven't thought about it. So that kind of engagement, the deeper it is, usually the more impressive, at least it is to me. So the more people say you're wrong, so it's one of those kind of things. The more that they have thought about it. Again, this is just giving you one pointer. There are obviously a bunch of other things, sharpness and dedication and passion and some depth in the particular field, right? Somebody wants to start a social network for children, which is like used to be a common theme 2 years ago. Everybody wanted to be the Facebook of something else. Like, you don't know anything about that. Like have you thought about it? So those are usually not. Those are red flags, I would say, and these are green flags.
Sure.
Yeah, I agree. Depth of thinking is a big piece, and then you probe for that. You go in and ask them to put them in situation. What about this? What about that? Because it's not the answer in some ways for me that he's talking about. I should be able to see the way you're thinking, and it's also an acceptance of an idea that is a curveball that is going to get thrown at you, right? And I will throw a curveball. I'll go in and ask you something and say, what about something else? It may be completely unrelated. And say, what do you think of happened? I go throw something else. Because that actually is the only, it's like any other job interview. I mean, in some ways, guys, this is no different than what you would want to differentiate and work through when you're going and working through a job interview. You're trying to go find that inner spark. And you are going to ask those questions to figure out what is it that's that inner spark.
Maybe it's a personal style of investing, but my first filter is to figure out vertical play versus horizontal play. Once I understand that, I look at is it a lifestyle business or is it a scaling business? In scale business, I generally look at possible camouflaging of service business as product business. Since I spent a lot of time in service business, I know the traits, how it goes, and I generally try to filter that. Like a cannonball firing guy, so the third will be anything they claim in technology. I generally get my antennas up, so I generally look for rigor. I think these three and the team, I think those are the four I generally look, and I think if they pass that, then I think then the classical diligence works.
Perfect. Any other questions? I see a hand there. Yeah.
So I think, yeah, I don't know about, I can tell you what I do. I mean, I've been an angel investor, and ticket sizes vary with if I'm putting together the syndicate, because there are a few deals that I have done personally, and I've got a few investors to come in and invest, or if I'm part of a larger angel network like Indian Angel Network. I can speak about both. Most of my deals where I'm putting together and bidding together a syndicate are usually in the 50 lakhs to a crore piece, because I'm a very early stage and I build that in. Usually 2-3 people get together and put that kind of money. If it's an engine network, I think the current trend is about 2.5 crores is the average that we had for the last few deals that I saw going through.
1 to 5 crores. Normally around 3 to 4 is where the sweet spot is.
They have one more.
At the back, you can ask a question. I mean, I think it's well known that in the ecosystem there are very few lead investors, which is what takes to crack the nut to close the round. I'd like to maybe your thoughts on how startups can crack that nut. That's the problem that I often see. Or is that too specific?
So the question is, you're saying there are so few lead investors, how do you crack that nut? Who will take a lead on the piece?
Yeah, exactly.
Yeah, it is a problem. It's a problem simply because, the whole, guys, just to give you a feel for it, I probably can claim to be one of the earliest angel investors, because I was a partner in Erasmic. When we put together the first fund in Erasmic, that was way back in 2003, right? Erasmic did not continue in that incubation and that model post 2006. So in 3 years, we actually thought that this is not a great model, and they moved to a regular VC model, right? So we've been through that piece for a whole period of time. The issue is not so much about leads. The issue is that there are a lot of people out there who think they're very good leads, right? So the issue comes with maturity of having somebody who's been an entrepreneur, who's done something on their own, who is coming now and saying, now I can be a lead, because that's a very different perspective. I think you'll find a lot of people out there who claim to be leads, but have worked for larger organizations, have made the money out of it, and think that now they can play the lead role, which is a very, very different piece. Because when you're living the life of an entrepreneur versus living the life under a big name, even if you had to run your own P&L, that's two very, very different animals, right? So the other point that I would like to make is, today there's a bigger problem in my mind, and the problem that I see in my mind is that, and maybe it's not the right forum for it, but there is a perception that you are a successful entrepreneur only if you raise money. At some stage, we have to get out of that. Businesses cannot be done only based on raising money, right? My first 2 businesses that I ran, I did not raise money. I built it over a period of time, sold it over a period of time. Yes, there are businesses that need a lot of money upfront. There are businesses that you can build without having that need in the process. So there is a whole set of people that you probably saw who bootstrapped and worked through. So there is this concept that I'm tagged successful only if I raise money, or only if I find a lead. That's the piece that I'm kind of raising a flag against.
Sure. Perfect. Yeah, one more question, and then we'll get into some more deep dive into other topics, and then come back again for more questions. Yeah.
I'll just add one
please.
more comment. So in my case, maybe it's a little, I would say, polarized investment. In fact, I am part of many lead groups in IA, but actually I'm not the lead investor. So I normally do the technical diligence of many deals in IA, but I'm not the investor. But where I invested in IA, I'm not the lead group. So it's a little, convoluted that way. I have also done deals outside of IAN, whether it's Let's Venture, whether it's Acumen Fund, whether it's PE firms. But I generally spend time, put effort in the lead, this thing, but not financially. So that's maybe slight variation from Ravi.
Sure, yeah, please.
Yeah, what percentage of your investment in companies which had no customers when you made the angel investment, and what was your experience? Maybe just based on it's a killer idea and they have no customers. Did you still go ahead and invest money in these companies?
I think in my case, my current investments are not like that. There is just one customer, but I don't know what.
Yeah, so I can name, there are about 4 investments that I did pre-customer base, including the latest one, which I invested 2 years ago. 0 customer, idea on the back of a paper, and it's taken us 18 months to build that. I'm now so excited that I'm moving in onto the team and saying, look, I want to drive this, right? So again, it's not about investment. It's about the business, it's about the idea, and it's about your passion and what is it that you want out of that piece, right? It's not, in all honesty, if you wanted a pure financial return, I will tell you, in my experience, this is probably not the best place for people who want to look at a pure financial return. I would say, please don't get into angel investment, at least. And it sounds odd, but that's the reality, right? There are better risk-rated reward processes, including a real estate, than in India, than to do what we do for a living.
Bala.
Almost all our deals are pre-customer.
Perfect. Now again, adding
So 0 customers is what I mean, most of our deals.
yeah, thanks, Bala. So adding some of my own investments, more than half of my maybe 6 or 7 of them were purely on the back of the paper. And looking back now, almost 75-80% of the businesses are not doing what they originally intended and raised the money for. So they've gone through complete transformation, including Grey Orange Robotics. When these kids came, we made the investment. The first B plan was to actually go and sell robots in schools and colleges as education, right? That was what initially we put money for. Quickly figured out that was not going to work. We even explored using robots to do surgery and quickly found out that the insurance and all those things in the US was really huge and it was not viable. And this was a version 4.0 that really clicked, and now they raised 10 million from Tiger and whatnot, right? So the answer to the question is, especially if you're talking about angels, predominantly, I think you're betting on the entrepreneur, you're betting on the passion, you're betting on a lot of things, and the customers will follow eventually, and that's where angels are passionately involved in opening doors, making those things happen.
Yeah, so that's one I did not invest in. So I remember him coming up and talking about this robotics space because I was involved in education. So I still remember that conversation. I said, I'm not doing one more in education, right? Just as an example of that.
Okay.
One follow-up question on the ticket size. So with this ticket sizes, what is the typical percentage that an angel investment carries, in the sense
Ticket size in angel.
ticket size and the percentage that typically goes for that diluted?
It kind of varies. Is the short answer. So
On a range, I was looking for in general, what would be a
look at again. I don't know if we have a range in the sense that we are in a sort of one end of the spectrum in terms of the number of investments we do. So I'm not sure our numbers would be appropriate or accurate in terms of what the market is. I know I'm trying not answering your question, but that's the reality of it.
Yeah, I think if you say from my previous session, most of my investments fall in that 13 to 30%. I think everyone. In fact, I don't even remember hitting 30 in the last one. It's always been 13 to about 25, 26. That's been most.
Maybe just to add one comment. I think on the angel investors, there is another characteristic which classifies them into 2 groups in my view. I think I'm around the second group. Some of us believe that we take risk either with our time or with our money, but not with both. So where we put our time, we may not invest, but we help them. Where we invest, we don't want to, we'll advise if they ask a question, but we don't want to control or do. So there are some investors I've seen, in fact, even some of the popular billionaires in India, they follow this principle. In fact, it is counterintuitive. I think because angel investment is about getting involved with the people, every time there may not be a money investment there, but you may have other investment. That's what I think.
Yeah, perfect. Yeah, one more.
What do you think is more wise for an entrepreneur, to incubate his product or just work for 6 months, build the product for 6 months, and then ask for VCs or seed investors to invest? Which do you think is more wise?
You want to do that? Because I've done both and I've
Always, if you can afford it, and if you have stamina and the market is not You don't have competitors like 10 people, copying the same idea where you need the money absolutely. As long as you can last, the longer you can build the traction and the prototype on your own, the better off you're going to be.
What about products which require huge startup money?
Understand? That's why I qualified all of that. If you cannot, then obviously that won't work for you. But to the extent you can, you should always try to do it on your own. That's my.
So, prime example, we're just raising a small round. I'm going back to my entrepreneur piece. Just raised a small round. Took 2 years or 19 months to build the product. All on our own steam. Not a single pie outside. Because you believe in it, and then you think, you have been told multiple times, a lot of people have looked at it and said this is not fit. Somewhere you have the faith to say that, if not this, I will go and figure out a way of making this. Because you believe in that idea and you're backing with everything that you have. Right? So it's not when I wear my entrepreneurial hat, I'm not wearing my angel hat. I will never survive if I were to do both. When I'm wearing my entrepreneurial hat, that's it. That's my life. It's my focus. It's all I'm going to wake up, and this is what you have to think of in some ways. And when people ask me the question, right? I just posted a blog. Somebody had asked the question, what keeps you up at night? It's not the problem that I'm going to fail that's going to keep me up at night. In which case, I'm not an entrepreneur. What is going to keep me up is the possibility of what else can I be doing, how else can I go and reach out. That's the thing that keeps you awake at night. So if you are in that half, you're not going to worry about how and what. You're going to figure out a way. Thank you.
The wildest idea I have come across so far, is a proposal to build a micronuclear reactor. I almost fainted. I said, what? Am I reading it right? He said, yes, I'm serious. So I took a few minutes to get my composure back. He said, what? He said, so it was a very wild idea.
Did you fund it?
No, we referred him to some government funding, but the guy is extremely well qualified. He has a PhD in plasma physics, so he's not talking. So, but it was a very wild idea. I don't think it can take the appetite of an angel investor like us, but it will of course take. So that's sometimes you get some really shocking ideas.
Okay. Yeah. One more question, and then I want to dive into some convertible notes because I have some.
I'm former TCS sir. Built the financial solutions in US and now work with.
Can you be a bit louder?
Ex-IBM Labs and built a SaaS solution for payer provider contract management in the US. We don't have a paying customer in the US as yet, but we do have customer for group underwriting insurance in the Indian space. Some of you might know it. So you mentioned a point that you look up to 7 of your investments do not have customers. So do you still invest about $1 million in a SaaS business with that kind of? Okay. Thanks.
I mean, I'm not saying I'm going to invest.
No, because did I get it? No. Did I get it right that 7 of your investees are?
I said most of them,
okay.
but yes.
And you invested around $1 million.
Up to $1 million.
Okay.
So the range, as I said, is 3 to 4 crores is our sweet spot.
Okay. Thanks.
Okay. All right. So I want to. Most often founders, entrepreneurs think that equity is one form of getting access to money, but then if you look into the US, other markets where there's a lot of maturity, people use different ways, including convertible notes. And so I wanted to open up the topic here in terms of how you feel as an investor, equity investment versus convertible note investment. That's the first part. And the second part, if you can highlight on maybe what is that typical discount that you may apply as a thumb rule, so people know what to apply or what to think through.
Sundi, I'm so sorry. I have to go to another city called Whitefield.
Okay, thanks, Bala. We'll continue.
So,
Yeah.
Thank you very much.
Yeah.
And,
Yeah.
So,
Thanks.
you guys all know how to reach me. Bala,
Yeah.
Any questions?
Yeah.
All right.
Thanks. Thanks.
Two examples, one as an investor and other as an entrepreneur. So just to give you the percentage, I think the number seems to be around 15% typically. But if as an investor, convertible note is a little bit of a debate because it actually discounts what is possible in future. That means you actually bet on the growth, right? But as a co-founder at Crayon Data, where we have done convertible note with both Spring and Jungle Ventures, so it works out well on the other side. But in general, I found that if the growth is good and the traction is good, I think maybe it is less of a debate. I think the problem starts when I mean, in convertible note by definition is always you're putting to the future, right? So I think depends on how the company is doing, in my view. So I think certain growth sectors, I would say web-based industries or web-based firms, I think it's a little more palatable. But if you give me the same thing on a firmware-based solution or energy solutions, I will think twice.
Okay.
So would I say 15 to 25%? Is that
15 is what I would generally take. Yeah.
okay?
So you have to be ready for a slightly longer answer. I would say that it depends on you're raising the fund in India or you're raising fund outside of India. Within India, there's really no option unless to do a compulsorily convertible debenture. And the reason I'm giving you all this is because I've been through a long time. Patient sometimes gets to know more than the doctor. Right? I've been through this multiple times on multiple of these occasions. So if you're going to do this in India, there used to be a warrants option that is no longer valid. You may not be able to get the warrants option, so you'll be left with optionally or a compulsorily convertible debenture. In most cases, it's a compulsory convertible debenture. The compulsory convertible debenture in India would, in most cases, have to carry an interest coupon rate of over 10%. Anything less than that there's a tax impact, right? So 15 doesn't make sense because you have to do 10% plus allow for some risk ratio and work through, which kind of
India, it makes sense.
yeah. So it kind of ends up being about 25-30% to go back and answer your question. So if you're doing this in India, either you have to be very, very clear that you are going to return the money in some ways, almost treat it as optionally convert debt in some ways, and the person is happy enough to do that, or you're securing it in some way, the risk portion doesn't come in, or you have to go and figure out how to get more than 25% out on a 20-month kind of a window, right? That's why I said it's a slightly long answer. US works very well. Most people would like to do that. And the reason for doing it is not the same. The reason for doing that is you don't want to spend a lot of time and effort and energy debating on the valuation. It's got nothing in my mind outside of that prime reason. If you can hit a valuation, somebody is coming in, you are going to go and figure that out, do it that way because it's much quicker. If you can't, you're doing this piece in the US, there is a better way of doing it. Also, the US, the reason why they would want to do that is because it goes out as a preferential stock, which means that in their next round and in any kind of strategic exit, you will have a non-qualified IPO clause structure. It helps them if they are preferred because then they get a liquidation preference on their exit, right? Why am I giving you this long answer is because it's not as simple as I will do X or B. It depends on these factors that you would want to take that on.
So in India, we don't do liquidation preferences.
In India, you do liquidation preference, but you don't. You would end up putting it as structure. The moment you do a debenture, it's treated as debt. It is all taken off before the liquidation, before anything else happens. They get 100% preference, and it's also interest, not just your. So they are guaranteed 110% of their investment upfront before you even do anything on the stock side, right? So by default in India, they get preference, liquidation preference of 110%.
Perfect. Are there any other questions?
So is it a norm? Can we take it as a norm? Liquidation preference, double liquidation preference and things like that. I've heard of things
No,
like
there's
that.
no such thing as a norm because a lot of people in India still don't understand what's a liquidation preference because let's face it, how many liquidations have you seen? I've done 17 investments. Yeah, I've done only 2 that I've got a liquidation preference option on. The rest of it I've not even seen the light of money in some ways. Right? So you have to allow it for another 3-4 years before you start seeing those things coming together.
So
I'm being very honest,
yeah.
right?
So probably in the angel round, you must be one of the people who have done the most number of term sheets.
No, there is There are two chaps out in
So
the-
I'm trying to get a-
Reddy and- So you go look up Bloom Ventures, they kind of.
Yeah, recently.
Within 1 year, no. They
Last 2
overran
years,
me in the first year of the operations, they just overtook me.
Yeah.
Right? So, no, when I say me,
No, but they have just invested, right? As you said, they've just gone into the investment round, not into exit round. So I'm just.
So, not true. Bloom and I did a first investment about 4 years ago, right? So, in a lot of ways, what you read in the Economic Times is not what happens outside. Bloom has been a major player. First year, they overtook me in a number of things. There are lots of people out there. There's somebody called Rajan Anandan, I think, has the lead number. The last count I had was he had over 56.
Around 60. I
Okay,
think
56 was the last number I remember, unless he's gone in a few more. So there are people out there who do a lot more than any one of us.
But Rajan doesn't go in the B2B space or the enterprise solution space, right?
56, I don't know. At 56,
Yeah.
Hi, this is Anup from Let's Venture. I just wanted to add one thing to what Ravi was saying. The first company that I saw last week, which is trying to do a convertible debt in India, which is trying to do something called a CCPS. It's basically a preference share. It's a compulsory convertible preference share, which is actually a preference share, but it'll have all the conditions of a convertible debt. That's something that's very new, and I just saw it for the first time last week. So I just thought I'd add that as well.
So that's just a reclassification of the convertible debenture.
Correct.
So but fundamentally, it's no different than the debenture.
Exactly.
Perfect. All right. Are there any more questions? If not, we'll dive into a couple more.
Yes. So when you're having a convertible note, so the idea is Series A, some percentage better valuation than Series A.
Correct.
So how is that to be determined? Any guidelines?
In our case,
US scenario.
yeah. So this is a non-India scenario.
Non-India scenario.
So we're right now between Series A and Series B. Actually, we are post Series A and about to go Series B. Generally, you give a range, right? Because I don't know what the valuation is going to be, right? So you cannot fix it. So normally we give some 3-4 levels and say if this is the valuation, this is what you get, right? But I think maybe what Ravi said is right, because I think in those markets where the interest rates are so low, I think you can play with a lot of numbers. But I think in India you're right. These numbers can become a bit funny if you have 40%, 50%, it becomes too much.
Yeah, again, getting some US experience, some of what IVK was mentioning, it's already generating cash, and you want to further fuel. You don't want to slow down your traction because you're running out of money, but you need a kind of a bridge. So in those instances, convertible note makes sense, and I've even seen some terms which offer or a range technically to say that, hey, if this converts within 6 months, I will give you a 15% discount to the Series A, but if I take, let's say, 1 year, it will be at a 20% discount. So you're actually structuring it in such a way on the basis of time. So there is pressure for the founding team and the entrepreneur to really make things work and close on Series A. But then this is the twin-edged sword, right? So if for any reason you're not sure, and you'll probably do this when you have assurance from an investor or a group of investors where they say, you know what, technically in my mind it can be a mobile play, I need 1 million downloads, you are at 40,000 or 100,000, how can I get there? And you're pretty sure that you're going to get to that milestone or close to it, which is fine. But if you don't have a road or a visibility, then you may end up actually giving more equity, because the third thing can actually be 18 months and 30% discount, which means you're actually putting a lot of equity on the table for something that you're getting into not knowing what the end game is going to be.
I think in our case, we actually did a bridge round just a month ago, and we actually got more money than we wanted, so we had to actually take a board approval to actually keep the extra money. But then now that we have the extra money, the argument will be that you can as well wait out a little more and get a higher valuation. So the more you push it to the future, the variance goes up. So we normally guarantee a certain, floor conversion. Guarantee 15%. But if the valuation is higher or lower, then we'll figure out the range. So I think that's it. And so we actually don't do it by temporal way, which is by time, but by the numbers of valuation. But we say that within 6 months we will go for the next round, something like that.
Perfect. Any more questions in the audience? Okay, so I know we are running close to time, but I'll like to wrap up with one question to both of you. I know angel investment is very risky, right? For some angels, getting money back is a success, whereas for others, it's anywhere between an IPO and going bust. So, what is in your mind as an angel, early stage investor, success in any investment? How do you define that within your own paradigm to convince yourself to make that investment?
So, financial success is very, very important, right? If you want to go back and play this role, and this is an important piece, irrespective of what anybody says to say I'm doing it for X, Y, Z, right? You have to be able to go back and sustain and work through. The first piece that you would always want to do is go and get your return on equity. You preserve that equity. So I'll give you live examples, and that's why we would want to do that. Whenever I've got into a Series A or a Series B kind of a discussion, especially in a Series A discussion phase, and there is an option to either put in more money or move out and work through, my first reaction is, look, if it's going good, I would want to invest more, right? Get into the second round, claim my offer on to being able to do the second piece. If that doesn't work, then my next reaction is to pull out my principal, right? Because it gives me the play. And think about it, that gives me a great feel because my return on risk is an infinity. My risk has gone down to zero. My return on risk as a number is an infinity, right? It's a divide by zero in that sense. So to me, that would be a great way of structuring a whole lot of these deals. Having said that, how many of you can really get to that stage is the piece. When something fails, you want it to fail for a valid reason, not because somebody's not tried. That really hurts you, right? If you go back, and that's why it's an important point, because I think in my mind I'm measuring what those failures are more than what my successes are. And the one failure where somebody did not try actually hurt me a lot more than the two other cases, which I think was a genuine failure. It happens, it's not as though all of them are going to be 100% success. So it's your perspective that you build, but it's very important that you build the perspective if you want to be an angel investor. Otherwise, you are going to lose a lot of hair. You are going to have a lot of heartburn because this is a very, very risky proposition.
Sure.
Again, maybe something from my personal style. I believe that I always keep risk and liquidity together. So stock market actually works for me well because it's high risk but it's high liquid, so I can always set it off. But angel investments are highly liquid. You can't get out. And you could do nothing about it sometimes, right? We have a minority stakeholder. So you can do nothing if you have a rogue promoter. Like you have rogue investors, you have rogue promoters as well. You can do nothing. So I'm willing to let it go. Hence, I don't think I'm going to put return as my primary objective. Getting involved in that area because I have a passion in that area is primary objective. However, since on average on a long-term basis you get a 15% return in India basis on equity, if I had to wait out for 3-4 years, that's about 60%. I put a risk multiple. So if I double myself, my investment in 3-4 years, I'm fine. In fact, in the investments I made, I actually got a 2.7 times return, which I did not take and stay invested. Whereas in the other one, which I thought I'll get 3 times, did not go anywhere. But I think that's the game you play, so that's okay. I mean, we just leave it there. But this is one of the issues I think people have to grapple with, that it's a highly illiquid investment. So unless you have some other reason, stock factor, to be associated with the investment, pure financial sense-wise, you think twice why are you in this.
Yeah. Sure. Perfect. If there are no other questions, I wanted to thank Ravi, IVK, Bala had to leave a little early, and Shripati.